thought I would get into looking at what everybody's talking about right now, which is obviously a whole bunch of firings, right? And I asked ChatGPT, one, if it could use the internet. I'm using the free version, of course. And it said it could, and I made it prove it to me with links. And I asked it something very simple. Can you give me a report of the most recent large company, large job losses, and then provide the articles from which you gained this knowledge? And it did. There's this first one from Reuters, which I have up on the screen here. As you can see, date is quite recent, yesterday. And if you haven't heard this already, I'm sure that you will soon, but Microsoft is planning another round of layoffs. And the reason I wanted to look at this is, one, yes, I'm using ChatGPT, which is AI, which is probably the reason why a lot of these job cuts are happening, aimed at salespeople, according to Reuters. Not sure if that's entirely true, but sure could be. And if it is, well, that sucks. But that's what's going down right now. So June 18th, Microsoft is planning to cut thousands of jobs, particularly in sales, as the tech giant streamlines its workforce amid increased investments in artificial intelligence. Bloomberg News reported on Wednesday, citing people familiar with the matter. The latest layoffs follow Microsoft's brief round of job cuts in May, which affected 6,000 people. Oh, sorry, employees, as we're all called. So Microsoft had 228,000 employees of last year, same time, same month in June, and now they have at least 6,000 less, and they're gonna possibly, I heard someone say 10,000, I don't know if that's true, but they're doing more layoffs. Microsoft has planned a capital expenditure of $80 billion this fiscal year, with most of it aimed at expanding data centers to ease capacity bottlenecks for AI services. Ding, ding, ding right there. So, yeah, I mean, this wave of AI is coming fast and hard. And I think a lot of people are now sort of waking up to that, which is great. I think that we should all pay attention to that, at the very least. Have an idea of what's going on. It's definitely going to hit us all at some point. Here, let me just adjust something. One moment. I just realized that this is like not even important to, whoops. Okay, you know what? We'll figure that out later. But if we look at this year, we can see, just like I think a lot of the economy took a total nosedive in April. Really leading up to April. From January, and then just now recovering pretty strongly, is what it looks like. Pretty swiftly. After April finished off, even at the tail end of April, it was just kicking right up, at least for Microsoft's stock, now doing $480 per share, which is a lot. And I believe they do give dividends, which is fantastic. It's like a blue chip stock in a lot of ways. I think based on the number of years it's been around, I think it counts as one. I don't know if there's other little markers for that, but yeah, it definitely looks like a good stock to invest in, as long as AI just doesn't totally destroy the market completely, which some people think it might, and I totally understand and agree with that in some ways. And we'll see as this ticks on. So if we look at the total revenue, we could do the quarter to really look at well, you know what? Let's not do revenue. That's not that important. Let's look at net. And so this is $45 million right here, because it's in the thousands. Numbers are in the thousands. But okay, so if we look at earlier in the year, can we go further back? Yes, we can. Go just to there. Quarterly breakdown. Last year, net was 181 million in the hole for operating, and then other expenses was even more. So negative income, still negative income. So technically, I mean, I think they've always kind of been negative, though. A lot of tech companies tend to do that. If we look at annual, what do we see? Okay, no, so not entirely. 2021. Okay, so 1 billion in profit, essentially. Like, one of these breaks down actual profit. Where is that at? It's been a little while since I've looked at these charts, obviously. Net interest income, which is fantastic to see. But, where is it? Sometimes they don't list it as profit, I think, sometimes too, which is annoying. You have to dig into it. Tax provisions. None of this. Total expenses, normalized interest, income, well, we can just keep an eye right on this one. The net non-operating interest income, and then the income expense. So, yeah, last year they were 1.8 billion in the hole for their expenses. So honestly, yeah, it kind of makes sense that they're doing these if they're not actually profiting. I'm gonna have to look into this a little bit more, but I think that's what these numbers kind of show. Now, if you look at, where is it? Do they still show it? Oh, I think maybe I'm looking at the wrong bucket here, because there's a bit that should show how much kind of total assets they have. Am I just not seeing it? It's total assets right in front of my face. Should just search asset. Yeah, I think maybe it's under profile. Oh, you know what? It's under financials. It's just under the balance sheet, I believe, and not the income statement. That's why I was getting so confused. Dang it. That's fine. Okay. I like looking at this. It's kind of easier for me to understand. Although, you know, if you want to be realistic for their liquidity, you know, you want to look at this one probably. What is the full title here? Cash equivalents and short-term investments. I mean, that's pretty high liquidity, obviously. That could be CDs, although I don't think they're doing stuff like that. Maybe stocks. And the receivable stuff that they haven't been paid yet, I believe, is how AR works, accounts receivable, and anything else that's in there. Allowance for doubtful accounts receivable. So that sounds like arrears, like stuff that's not going to get paid, possibly. But we'll ignore that and just look at this for now. So they had a cash reserve, essentially, we'll just call it that, of 130 billion, because again, it's in thousands. 130 billion in 2022. That went down to 104 2021. 2022, it went down by like 30 billion, almost 26 billion, essentially. And then in 2023, slightly recovered. The cash equivalents, I mean, obviously, like, they could be moving money around if we look at the other deals here. It's good that, okay, so they're cutting down on inventory too, it looks like. at least between 2023 and 2024. This is just annual. I think if we look at quarterly, we can probably see, we can see 2025 coming in. So yeah, and then they just dipped way into their reserves again by even more. I mean, this is 75 billion from in 2021 having 130 billion in cash, essentially cash. So that kind of doesn't bode well, as if they're not. But it could also mean that they're reinvesting this stuff into something else, which if we looked at it further, we could probably see. And then, they have a high total debt. Well, actually, look, so their total debt's been consistently 67 billion in total debt, essentially, over the last 4 years, which is consistent. It's also a lot of money, but based on, their total assets, they're totally fine. I mean, total assets, including stuff that's not easily liquidated, as of last year, was $512 billion with a B. That's like $500 billion right there. So that's pretty big, which is great. And then I think if we look at, what is it right here, total current liabilities, I mean, we kind of can see that here in the total debt. So now if we go back to, we can look at the cash flow. So investing cash flow is doing total dog shit, negative 56 billion. Financial cash flow, same deal, but it seems like those two have kind of not been too great. They've always been negative for the past 4 years. End cash position has crept up a little bit and then took a nosedive in 2024 in June. Issuance of capital stock, issuance of debt, and then free cash flow has been pretty consistent. So if we go back to the balance sheet and then we look at quarterly to see what's the latest, we can go to just this current round of firings to see. Well, I guess we can't get that close because we're not into that quarter yet. We haven't ended that quarter. But go right here. So total assets, great. Current assets, great. Cash and cash equivalents. And I mean, we can go, I think we can drill all the way down to cash, like straight up cash, which they've kept it at about 10 billion over the years, over the past 4 years. I think, wait, no, this is quarterly. What has it been? So it's been about 7. So it looks like they've actually been putting more into cash, at least over 2024. And then it seems like they're staying consistently with a little bit more of a cash position in 2025, at least as of the first quarter, ending in March, which is interesting. But all of that is just about the same, not even as much as it was a few months ago, a few quarters ago, but certainly a lot less than it was a few years ago. Although the cash has stayed the same, the equivalents. Okay, so it's the short-term investments that they've been kind of dumping out of, it seems like, more and more, but I wonder if that's just to get the returns. Anyways, whatever's happening with them, they are, bleeding people at this point. So there's this other article. Ooh, copy that. And I don't know if I can actually read this. Okay, no paywall. Cool. There's just these lovely ads on it. Microsoft plans to cut thousands more employees. And this was as of yesterday at 5 p.m., 5:19 Eastern time. Oh, shit. Okay, I'm not gonna do that right now. I know I'm a cheap ass, but it's interesting saying that. And then obviously there's a lot of other. I bet I can ask ChatGPT, which is the one that it's just killing our jobs. Okay, it's not just ChatGPT, but it's a lot of this AI. And I think people not understanding what's going on with it, and some people understanding it more and taking advantage of their understanding and, well, reaping the benefits and hopefully not just destroying stuff. So Intel lays off up to 20% of factory workforce. So, I mean, to me, that either means that they're just doing crap right now, which we can check out, or the AI or even just robotics automation is just advancing enough that they can do these layoffs. They can have robots do the jobs that people were doing. Okay, what is this? Intel. I don't even know what their ticker is. Is it okay? It's INTC. Intel. Over the past day. Interesting. So, I mean, they went up a little bit, like by $1. Okay, so past 5 days. Past month. 6 months. Let's just do the year. It's just a little easier to. Well, okay, wow. So, I mean, this is just a stock price. Again, it doesn't necessarily. I mean, it's the amount of people that are investing in it, and then the worth that people are giving it, and some other crap like that too. But it did take a nosedive near the end of last year, and actually, I mean, pretty much consistently stayed fairly low. It looks like in the 20s on average, maybe, over the last quarter of 2024, and then into, the first quarter of 2025. It's just been around $20, where it was up at $33.50. If we go back 5 years, was that normal? I guess it's kind of, if you look at the stock, okay, let's not go that far. But yeah, I mean, it was at 60 in 2021. It was high, and then it's kind of petered out in 2022. Another spike up in 2023 at the end of the year, and then it's gone down. But again, that's just the valuation in a lot of ways. It's not really how good the company's doing necessarily. It's how good maybe investors feel the company's doing, which could be part of why they're laying off staff. Maybe they don't have the confidence, or like literally they don't have the books to cover it. So let's see what's going on with them. Annually, we'll just go to total cash. Basically, over the past few years has been consistent-ish, except, I mean, they're bleeding billions, and it seems like they have a lot less total assets, which doesn't necessarily mean, well, actually, yeah, it does. Because I think there's also, inventory. Oh, that was another thing that Microsoft looked like they were chopping down on inventory. They are ramping up on inventory by $1 billion over the past 4 years. Or sorry, over the past year, 23 to 24, going from 11 billion to 12 billion in inventory. Keeping about the same amount on average, I'd say, of raw materials ish. Work in progress. Okay, finished goods. Basically saying the same. It does look like they're trying to kind of increase their output, at least last year. If we look at the quarterly, yeah, not as much the first quarter of this year as last year's last quarter, but still keeping up higher pace than the previous 4 years, I believe. Is that right? Well, okay, maybe not higher. Okay, higher than the average, sort of ish. Well, I mean, this kind of messes the average up a bit. Anyways, it doesn't really matter. Yeah, and quarterly, they're still dumping. Well, looks like they go up and down a bit, but if you look compared to it yearly, and if we go further back, maybe they had even more cash and cash equivalents and short-term investments. What does it look like if we just look at? Oh, okay. So they don't break it down to cash. It's cash and cash equivalents, and then short-term investments. And it looks like so they've also kind of increased their cash position a little bit, kind of keeping it at that same range. And their short-term investments looks like they're whittling that down. They're still whittling it down, so maybe they're kind of slowly selling off these short-term investments, trying to keep it safe. Total debt. So total debt is consistent over the quarter, and it's so I mean they've kept it decent over the past few quarters, but over these few years they've accrued more total debt, and this is 38 billion in 2021, and it just increased to as of 2024 last quarter 50 billion in debt to their so I mean, like, if you look at their cash and cash equivalents, it doesn't even cover it. And if you remember on the Microsoft one, they had, I don't know, what was it, like 2 to 4 times as much for just cash, and then their total assets was 500 billion. They're not that, they're over leveraged. Their total debt is, I mean, they're not totally over leveraged, but I wouldn't say that this is a great position for a company to be in, even a large one, because what is the rest of this money? The rest of this money is, what is this? Total non-current assets. So, yeah. I mean, that's not great. What is net PPE? You're gonna have to just forgive me because I don't, I'm not an expert here. I'm just some dude who's trying to learn stuff. Okay, net property, plant, and equipment. So I think that just means like their equipment essentially. If they were to liquidate it. So if they basically went bankrupt, or before they went bankrupt, or maybe at that point, whatever. Add your assets that can be classified as property, plant, and okay. So here's a little calculator. How do you calculate the net PPE? We just see ins and outs. Yeah, depreciation. Because you probably would amortization. Oh my god, amortization. I can't even speak. Amortization. I'm probably fucking that up. Anyways, you'd probably do that kind of a calculation, right, for part of this. Do they have that? No? Okay, whatever. Capital expense are any added money you put... Okay, this is gross PPE. Gross PPE is the total cost you paid for all assets at the start of the balance sheet period. Okay, so anything that's an asset for gross PPE, and this is net. Gross PPE is properties, machine, furniture, equipment, construction in progress. Okay, so good, bad, I mean, interesting for sure. And this is the annual, so that's probably part of their debt, I'd say, is coming from these construction in progress. So they're really, they're trying to expand, it looks like. I know we haven't really busted into the article. We'll do that in a sec. Let's just keep analyzing this. It's interesting, right? So construction in progress from 2021 to 2024, they've gone up 30 billion for these in-process constructions, and they've got more assets. Properties have gone up a little bit too, by 5 billion. Really, 46 billion over the past 4 years. I keep saying 4 years, but it's 3, whatever. I guess that'd be the 4th year, right? So, 4 years. So that's pretty good in some ways, as long as it's gonna pay off. Um, I think this goodwill and other intangible assets, I think these are kind of like AR, although maybe not. But that's been going down. And yeah, those track pretty closely. So maybe a lot of their debt. Is there a breakdown? Current total liabilities. I bet if I looked into this, maybe I'd see. But I mean, their total debt is pretty even with their construction in progress ish. And they're getting more properties, or at least the worth of those properties is increasing. I'm guessing it's getting more. I mean, I don't know how much it costs to build these facilities, but I'm sure it's not more than like $5 billion, right? I'm not in construction, but yeah, that's a pretty big jump. And then if we look at quarterly, okay, what the fuck? That's a little spooky. Maybe they just wait till the end of the year to put that down. No, that doesn't make sense. Oh, okay. So yeah, maybe they do at the end of the year for properties. Maybe that's just how you count properties and furniture. I guess this kind of makes sense, right? Why would you list it every quarter? I mean, maybe you would. Maybe it just costs more money to figure out the these things on the books. Construction in progress, kind of odd that's not on there too, but yeah, based on this last quarter, that must be when they're calculating it. Okay, so we'll go here. Total revenue is decreasing, which, I mean, that doesn't necessarily, it's not necessarily a bad thing. It can mean a lot of things. Just because the total revenue is decreasing doesn't, I mean, it could just mean that, the price that they're selling it for is cheaper, or they're selling less. But there's a whole bunch of other stuff that comes before that adds to the amount that you need to, sell things for. Say you buy a dozen eggs for, just stay with me, $6, right? So that's like 50 cents an egg. You need to make a profit to sell those individually or as a whole dozen. So you mark them up by 25 cents each. That's 75 cents an egg. All right. So your total revenue, if we're just counting that, is that amount. But you're really only profiting 25 cents per egg. And then also you have to count in the other bits that you're losing out on, logistics and advertising, whatever. So maybe they're shrinking that somehow, and that's why the revenue's going down. Could be. Or they could just totally be fucked. It's really hard to tell. I'm just looking at total revenue. Oh, nice. They have gross profit. It'd be nice if they had net profit. I don't see net. Maybe it's in one of these. Net income. Okay, net income is, wow, holy shit. I feel like we didn't see this on Microsoft's, but maybe we'll go back and look at that. But that doesn't look great. I mean, yeah, that doesn't look great. I think this is like the current running bill, but negative income is never a good thing. And I think net income is basically like profit on these. I think sometimes they just label it differently. But gross profit has been shrinking over the past 4 years by a lot. 43 billion in 2021, down to 17 billion, 0.3 whatever, in 2024. And it's shrinking more and more. Yeah, some of that's an average. Like, looks like the third quarter of last year was a terrible, where am I at? For a gross profit. And then if we look at, oh my God, where are we at? Net income. Yeah, I mean, look at that. That's a huge loss. And then it even got worse. Oh, okay, no, it didn't get worse. Extra zeros here and here. But yeah, negative $1 billion in the second quarter of last year. Then negative $16 billion income in the third quarter of last year, and then a negative 126 million in the last quarter, the fourth quarter of last year. So they kind of wrangled it up a bit, but then I mean, look at this first quarter, it went up. It's not up in the billions, but that's almost $1 billion. Negative 821 million last quarter, just a few months ago. So, if they're not going to be able to get profits, and I wonder if that's NVIDIA. I don't know what is necessarily causing that. Maybe the article will shed some light onto it, but definitely doesn't look too great for them as far as their income. Now, I'm not an expert. There's a lot of shit I could be missing. Let's see what the article says. Intel, the Bay Area semiconductor giant, will lay off between 15 and 20% of its factory workforce beginning in July. Wow, that's really coming up. Just weeks away, really. So they're expecting to eliminate over 10,000. Over 10,000. It's expected, but still, it's a huge number. I mean, it's 10,000 people, potentially, that are just going to be out of work. And who knows if they can find anything. I hope that... I mean, I think a lot of people all over are trying their best to find jobs and apply to as many as they can. It ain't easy out here, for sure. I don't know. I mean, what the best thing you can do is just keep building up your skills, becoming as dangerous as possible, as good as and as valuable as possible. But I mean, even with all that, if the opportunities aren't there, I mean, they're just not there. You can try to make them, but that's hard too. Man, my heart goes out to you. That's just fucked up, man. I've been fired a few times, and it could happen anytime. Getting laid off. And what's really fucked up is that how are you supposed to even save enough money to be okay in this case, especially if you have a family to take care of? The cost of living is just through the roof, unreasonable as hell. Anyways, that's enough of that doom and gloom. Let's get back to analyzing this shit. The layoffs will impact Intel's Foundry division, which spans from technicians on production floors to researchers developing the next generation of microchips. So it sounds like basically factory workers, whether you're a tech or an engineer, you're going to get booted. And from what I was hearing, same thing with Microsoft. I didn't see it in the article necessarily. Maybe I skimmed over it. But yeah, Intel has not disclosed how many factory workers it employs. Isn't that like publicly available? Maybe not. It is a private company, right? But estimates suggest the affected group comprises roughly half of its 109,000 person. Oh, okay, so so we know how many people work there. We just don't know exactly what of that percentage constitutes as a factory worker. Though in scope, the cuts are expected to weigh heavily on Oregon, home to 20,000 Intel workers. The company explains in the state it is also company's expansion in the state is also in question, as 115 million in the state subsidies hinge on hiring benchmarks, according to Oregon Live. So at least the branch that's in Oregon is getting $115 million in subsidies from the state, apparently, which I didn't know that. That's interesting. So what is this little
It's been 1 year since Intel Foundry's first Direct Connect, its premier customer and partner event for its Foundry business. And since then, Foundry leaders have been dialing up their focus on customers in every possible way. New and expanded technologies, a broader set of partnerships, and changing the way Intel Foundry operates. The announcement.
Well, it's a little walking dog there, huh? So they're getting into robotics. They probably have always been in robotics. Okay, Boston Dynamics. They're pairing with Boston Dynamics with Intel chips, I guess.
Operates. The announcements shared at this year's Direct Connect event reflect what they've been hearing. Here's a look at some of the highlights. First, Intel Foundry announced it has delivered an early version of the Intel 14A process design kit to top customers, with many customers looking to build test chips on this 18A successor. Intel 14A will improve performance, power efficiency.
Okay, so at least on the surface, it looks like they're trying to keep it going. On track for HVM yield levels. I don't know what that means. Okay, so who's this? Who's saying this? We are taking steps to become. Oh, that's literally the video. The job cuts will follow years of lag. Yep, there we go. Years of lagging sales, missed opportunities in artificial intelligence chips, which I think NVIDIA. Oh yeah, getting ahead of myself there. Yeah, NVIDIA's killing it on that. From what I've seen, we could even look at the stock in a bit. Dominated by rivals like NVIDIA. I don't know who else these rivals are besides NVIDIA, but okay. Intel posted an 800. Yep. Yeah. But I love how they don't even like. I mean, I guess they're just focusing on this year, but like. So they've been reducing headcount since 2023. But I mean, this isn't even the biggest loss. See, this is this exact 821 million loss first quarter of this year, right? We can see that, right? Oh my God. Right fucking here, right? But I mean, just at the end of last year, I mean, $16 billion in losses with their balance sheet is... Don't get me wrong, I really like Intel. I love tech, okay? Maybe not the people who run them. Not that I don't like them either. I'm just saying I like technology, right? That's what I'm talking about. But their cash and cash equivalents is kind of dog shit. And then their total assets is not great either. They're doing okay. Like, they could liquidate all their shit if they needed to. I mean, not all of it, but like, $50 billion, and still have some assets. But what is that going to come out of? It's not going to come out of I mean, they could take $12 billion out of inventory, but then what are they going to sell, right? So they're not going to do that. Where was that other chunk? Okay, so this is the chunk. So like, they could sell off properties, right? Properties, $50 billion. They could just sell all their properties, but how are they going to operate, right? Machinery, same deal. Like, and they're ramping that up in hopes of an expansion, I'm assuming, to kind of cover all these losses. But then, if they can't get better automation, I don't know how they're going to, recover from firing a bunch of engineers and technicians. I mean, you could probably get away with firing a decent amount of engineers for a little while, as long as you're pumping stuff out, like the technicians or factory workers, whatever you want to call them, people on the floor. But you do have to innovate to keep up, and so that, I mean, either way is a huge loss. The only way that it's less of a loss is if they're really tapping into AI at this point and other forms of automation and integrating robotics automation more. And maybe that's what this is. Maybe this machinery, furniture, equipment, whatever the fuck that means, is part of that. And maybe construction and process, which they're ramping up, is part of that too. I hope it is. Now, I don't think that justifies them firing a bunch of people. I think that this is a whole bunch of mismanagement from just decades of greed and foolishness and really just a lack of empathy, human empathy. But I mean, shit, what do I know? I'm not running any of these companies. I don't know dick about this shit, but not great. Not great. I know I'm cussing a lot, but this makes me feel some type of way for sure. That's kind of long and short of it. It's not looking great for these two companies, and wow, it's pretty amazing that ChatGPT, this is not a plug, can just spit this out. I mean, if I look at the summary table to the response it gave me, besides these little bits. So this is what it says about Microsoft, thousands more layoffs coming in sales and other departments. Okay, that's what so sales and other departments, whatever the hell that means. Maybe developers. I've been hearing a lot about that and seeing TikToks of people being fired that are devs and probably managers and all that stuff. But they're doing another round of that. Yeah, they're pivoting to invest $80 billion in AI and data center capacity. So, I mean, they're really going to lean heavy on that. I think a lot of companies are, especially the big ones that can afford billions of dollars for data centers. And yes, everyone talks about power and, we're not going to have enough power. I don't really think that's going to be a problem. I think nuclear is quite viable, and there's a lot more. Apparently, thorium is something that could become viable, possibly. A lot of research still needs to be done. But there's a lot of ways to get power. And maybe that's by limiting our usage of power, increasing the price of power for normal people, which I wouldn't put it past the government or corporations to lobby to do that, honestly. I hope it doesn't happen. That would be, I mean, there's a certain tipping point that's going to happen if we keep getting pushed down like this. I know that. And that really sucks. I hope it doesn't come to that. I think that it's also possible that this automation could really lead to some beautiful things. I mean, imagine not having to work, or not having to work as much because stuff is mostly automated. Your products, your services are done by something that doesn't desire or require much at all. It doesn't desire anything, ideally. Another fear right there, Terminator. But let's say they don't have desires at all. However we keep developing them towards AGI, but there's no desire, and there's more efficient ways to power them. We don't have to do much. You can have robots, and this already exists, robots that self-repair, self-create. Factory lines are already a part of that, right? So it's not that far away, especially at this point. So I could see, I'm hopeful. I really want to leave this on a hopeful note here. I can see a potential for a world where, if anyone has watched Star Trek, you might know what I'm talking about. If you haven't, I encourage you to watch the show. Any of them, really. Probably the more classic ones, maybe not the first one, but there's a lot of hope in there. And that hope comes from the fact that there is a lot for us to do as humans, even if we're not getting paid to do a job. Think about the passions you have, the things that you like to do in life, the things you love to do in life. I mean, it could just be as simple as cracking a beer and hanging out with some friends, maybe going outside for a walk in nature. It could be doing some work, but just because work is automated and you don't need to go to work to make money doesn't mean you can't get enjoyment from doing things. I mean, think about all the survivalists that have fun out in nature. I know I keep harping on that, but it's pretty natural for us to do that. Where you can farm. If you had property, maybe we'll get to a place where everyone has a property and you can do whatever you want, within reason and morality, right? You could farm, you could tinker in your workshop, you could paint, you could do makeup tutorials, I don't know, whatever you want, right? Because you just have that time. You wouldn't have to give it away to a corporation. And if you think about it, and this is not for any sympathy for corporations or CEOs or any of that, but we're all part of the system. We're all contributing to each other. Our ability, money is just a way to say I did this amount of labor And so I get to expend that time that I put into providing you a service, someone who bought something from you, a service, a product, whatever. However you contributed to that pipeline, to that product, to that service, you deserve something back from society. Food, shelter, right? Those are the basic things. Water. And then the other things like entertainment. Maslow's hierarchy. Having enjoyment in life. So, I try to reflect as much as I can on all these things and keep up on it. And I definitely encourage everybody to do that. You should always, let's remove that and put this silly looking guy back here. Money's important. Friends and family are important. Your self-worth is important. And your sanity is important. So, keep your heads up. And I'm going to try to do the same. And we just got to keep supporting each other. That's what we're here for. Take care, y'all.